you very much for the invitation, and I look forward to explain our investment philosophy. When I say our, it's Bearing Emerging EMEA Opportunities, BMO PLC. As you can see, we are operating essentially in the time zone that encompasses emerging markets. In our time zone, in the emerging markets that are covered in our time zone, and that is an area that spans from the Cape to Gdansk in Poland, and from Kazakhstan to Morocco. But the main 5 markets would be the new EU member states: Greece, Turkey, the Middle East, and South Africa. So this would be the main markets. These are these economies altogether encompass approximately 400 million people. So it's a sizable consumer market too. However, it's from our perspective unjustifiably so often overlooked. So it's not really covered from the developed European side, but also within emerging markets, the focus is very much on, of course, Asia, and very often also LATAM. And we think that EMEA will play a much more important role in emerging market portfolios in the future. And the reason for that is that we see attractive growth opportunities, but also interesting valuations. On top of that, we think it's a diversified backdrop of uncorrelated markets. Take, for example, the fact that some of our economies are major energy or commodity exporters. Others are big commodity consumers. Then we have export champions such as Poland, for example, but also countries with a very attractive demographic structure such as Turkey, and also the idea of some countries becoming energy hubs, not energy exporters, but rather energy hubs such as Turkey or Greece. And of course, the green transition, as in many other geographies, plays an important role here too. And we do believe that EMEA will continue to play an important role to deliver energy to various places across the world, but probably in the future in the form of electrons and not in the form of barrels of oils or cubic meters of gas. So that's for growth and diversification and valuation. I think if you take all of that together, right, you can generate a portfolio that should overall, we believe, enhance the structural quality arguments within a broader portfolio. So in other words, we think EMEA does add quality to global portfolios on the equity side of things. And the qualities I highlight here are, apart from the growth that I have briefly discussed, also a defined income strategy here. So this is this portfolio of ours. This trust is not set up as an income trust. However, it is the sheer fact that valuations are quite attractive, and that translates the dividends into a relative attractive yield. So companies are actually boasting moderate dividend payout ratios. So investment levels are high, and that's, I think, testament to the growth opportunities. However, the attractive valuation of the region allows us to also return an attractive dividend policy, or run an attractive dividend policy, and that expresses itself in a yield that hovers around 3%. And we think going forward, and that's the important message on this front, we think going forward, the DPS of BMO can actually increase, and that should allow shareholders, we believe, to combine an attractive growth asset with a solid income element. We run a portfolio that is highly concentrated. So these are the five major hubs that I talked about translate into a portfolio of between 30 and 60, but normally between 30 and 40 to 45 stocks across all regions and across all sectors. So we tend to see our job in picking the right stocks. We don't run major sector or country bets. So this is very much based on stock picking. And we draw our ideas from a dedicated team at Barings of 4 individuals, and that includes also myself. We have an experience of more than 25 years in the region. You do see that performance has recently suffered, right? And that's something that I'm actually quite proud about. That sounds a bit funny, but you have to take into consideration that we wrote our Russian exposure to zero, and that's example. And you can see what kind of effect this had on a relative and absolute performance. We had about a quarter of the fund invested, a quarter of our portfolio invested in Russia, and that was written to zero. We have since, I believe, recovered nicely, and I'm very confident that we continue on this path. Right? It, I think, demonstrates the inherent resilience of the entire portfolio, that such a big blow was actually dealt with in what I think is a very positive manner. So going forward, as a shareholder, you are still owning Russian assets, and that presents an optionality in the long run, of course. However, it's important to stress here that we have written those assets down to zero. We demonstrate our relative performance since the events in Russia and the Russian war of aggression in Ukraine. In this chart, you do see that we have outperformed substantially since then. Clearly, we'd like to see an overall positive performance. So it's not, it's not nothing to write home about in the sense of creating wealth for our shareholders, but we want to point out that we have substantially outperformed the underlying benchmark, and that gives us confidence that our approach is the correct one. I highlighted the yield of approximately 3%. You do see that the underlying portfolio yield, dividend generation, revenue generation has suffered a bit. That's actually a very good sign. So we have diversified our portfolio away from Russia in 2018 and 2019. Russia was a very attractively valued market for a long time. We wanted to have more stability, more diversity in the portfolio, and therefore steered the overall portfolio away from Russia. Yes, we were still invested to the tune of about 25%, but that's substantially less than other competitors in the EMEA field. That also meant that the underlying dividend generation and revenue generation fell in 2020 and 2021, as Russia was just a very, very highly dividend-paying market, and diversifying away from it meant lower dividends. Now that Russian dividends have completely marked down to zero, you do see that we kind of dropped back to the level of 2014, 2015, but we are confident that we can grow from the current revenue generation again in the future. As I highlighted, this is not a primary objective of us, but we do believe that it is reflective of the underlying attractive valuation in the region, and the board of directors does consider the underlying revenue generation in a way that it will be returned to shareholders, everything that is generated. The portfolios that I highlighted, to you is invested in this 5 regions. You do see, if you look at this pie chart, you do see more markets than that, but as I pointed out, I would describe it as an emerging European part, which is approximately 20 to 25%, and here countries like Greece and Poland and the Czech Republic are featuring. Then we have about 30, we have about 1/3 in Saudi, plus other Middle Eastern countries and Turkey. That would be another 20%, and the remaining 1/5 of the portfolio is invested in South African stocks. So this is our current portfolio, and as I highlighted before, do not expect us to run major country or sector bets. If that's the case, we kind of would run out of underlying investment ideas on a single stock level. We don't think that this will be the case in the near future, as we see substantial opportunities on the single stock levels across sectors and countries. The largest sector, talking of which, right, the largest sector in our region is the financial sector. So we are quite confident about the opportunities that we find in banks, insurance companies, and stock exchanges across the entire region. I think this also marks or highlights an important difference of the region relative to developed markets, and especially the US. We think that the underlying problems that we see in the US banking space and regional banking space cannot be extrapolated to our region. We also highlight that financials perform very well against the broader index. So one of the reasons why financials actually stand at this relatively large share is the sheer fact that financials have performed extremely well over the last couple of years. And we do see that this will continue in the future going forward. But as I highlighted before, this is very much stock specific and stock idea driven, not so much just a bet on one particular sector. But importantly, going forward, we do believe that there's still more money to be made for our shareholders in the financial sector. Talking about stock picks, I've highlighted 3 companies where we are currently invested, where the portfolio is currently invested. These are 3 sectors, these are 3 geographies, and we also think 3 were quite attractive opportunities from in the medium term. Let's start with MTN from the left-hand side. MTN is the largest African telecom operator. We also attracted to the stock on the back of its very successful mobile money application. We think that MTN will be able to generate substantial growth rates going forward. And we also think that one of its largest markets, Nigeria, is actually moving into the right direction with regards to its currency regime. We've recently seen a major devaluation of the currency of the naira in Nigeria, and we think this kind of opens the way for a more constructive approach on monetary policy in Nigeria too, and this should ultimately translate into value on the MTN stock level in our perspective. The next stock is Tata Wool from Saudi Arabia. It is the stock exchange, the Saudi stock exchange. We think it embodies a lot of the ambitious aspects of Saudi Arabia and the Saudi government. We think its management is actually steering the company into exactly the right direction, and we think that the deeper Middle Eastern stock markets and the increasing financial inclusion opens up very, very attractive growth opportunities for Tata Wool down the line. So that's a stock pick in Saudi Arabia in our portfolio. And lastly, Alpha Bank of Greece is a stock that will benefit from economic healing, has benefited from economic healing in Greece. We think that the Greek economy is actually the most attractive one in all of Europe. So not only the emerging European part, but all of Europe. We take confidence in the re-election of Prime Minister Mitsotakis and his team, which will allow the Greek a success story, this remarkable success story, actually continue. We believe that Greece is also a market that will disproportionately benefit from a very strong tourism trade in Europe. And overall, we do also believe that foreign direct investment, something Greece has lacked for a very long time, is actually going to return to Greece, which ultimately will lead in an upgrade of the sovereign risk, maybe in September by S&P to investment grade. And I think this will then open the next chapter for Greek banks, and specifically Alpha Bank is a stock pick here, where we see attractive valuations at price book valuations of approximately 0.5, which we think is substantially undervalued. So these are three typical examples of stocks in our portfolio, and we find, as I highlighted, stock picks and interesting investment opportunities across all sectors and all geographies in EMEA.